But the thing is that you've talked about rates will come down over time, but you've been a little bit circumspect about the time over which they should come down. Could you give us your sense of that right now?
Well, I was pretty specific of the time frame in the run-up to April 2nd, and that I thought over the year they could come down a lot because we're at pretty much full employment and inflation was headed to 2%, and that's the thing that the FOMC by law is supposed to be looking at. What's happened is we've added a lot of uncertainty and we've added a lot of dirt in the air, which much of it has come from tariffs. And the tariffs, the theory that tariffs are a one-time price increase, that's true for one and done tariffs. And these haven't been one or done. And so we're trying to grapple with this idea of, is this going to be a persistent inflation shock? Is this going to be stagflationary in direction, which is to say it's going to be driving down employment at the same time as driving up prices? That's the worst thing the central bank has to think through because there's not an obvious playbook. You got to sort of weigh off which of these is a bigger miss and how long is the bigger miss going to last. So you can't answer the question, when will we know that we're back or still on the path that we were on before April 2nd, without answering the question, is this going to be the end of the stagflationary shocks, or are we going to keep getting new policy administrations?